So, okay, so first, let's go take a look at the profile. Actually, let's not even do that. Let's look at it from this perspective. Because I eliminated my profile chart from this, that's all right. I know what I'm going to do. Right click, duplicate chart, and I'm going to put up a let's see, data limiting, session times, no, bar period, 60. Okay, here we go. One sec, this will kick in. And good morning, this is Simon with Trading Perform Coaching, and we're doing the first hour's trading here on YouTube and recording it for the members, which is the primary purpose of this. And then let's see what else. You grab the blanket if you want. And then grab the, let's see, not here. Let's do, there you go. So if you'll take a minute to read this legal notice, past performance not indicative of future results. You can lose a lot of money trading futures. This is for educational purposes only. Yada, 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 so on and so forth. Please do not trade with real money when you start trading until you have a process that you know you can repeat. It is expensive to lose, right? And not necessarily use Top Step or Apex Futures funding in order to get your trading down. Okay, so if you look at the hourly, there's a 1 hour chart, US session only, and you see a pretty clear pattern here, right? And that pattern is up. We had to break swings in order to go lower. So I would say right now, pretty obviously, you're gonna have to get below that right there. So I put 17,539.50 as two areas. First of all, there's stops sitting behind there, and you should get a responsive buy back up. This is the most recent swing low relative to the high, and that brings you up to 17,231 and a quarter. The important part about this is until you get an impulse move below here, and I'll show you what it looks like because we've had one not so long ago. Let's see if I can find it. Well, you see we haven't had one. Here, let me pull it up so you can see what it looks like so there's no confusion. We'll give it a minute to load. Shouldn't take too long. Or maybe I'm wrong about that. Z, and then we'll move on to the current contract. Okay. So what we are looking for. Okay, so this is an example of why you want an impulse move below. Okay, so this is the high. This is the swing low. It was all set, but this is the swing low relative. So you can measure them in chunks, right? So this was the low, we went to the high, or you could use this. Any of these going back, but each time you make a high, you can kind of move it up. So what you'll see is we closed underneath. They try. So see right when they get behind it, they backside, they come back in, find responsive buyers, push back up, right? Once you get behind this, they find responsive buyers and they push back up, right? So what you need it to look like is this. Okay, here's your move to the high. This one's a little bit more complicated, so I'm going to do it like, I'm going to use, in this case, I'm going to use this as the low relative to the high. So see how there's a big move behind it? It's not a tiny move. It's a big move behind it by a couple hundred points, right? Then it comes back, does a 50, 60. So look, it breaks, does a 50, 60 back, gets behind the 62 retrace just to stop out all the shorts at the 50 retrace, and then it rolls over, right? Does the opposite on the way up. Here's your, we're going to call, I don't know, we can, in this case, we can just kind of cheat and call that the swing high relative to the low. And if you see that, we break it. Oops. We do just again, you'll notice everyone gets all eager at the 50 retrace. They stop everyone out behind the 62, then they swing it back up. That's a pretty good map, right? And what you'll notice about that 62 retrace is it needs a decent stretch, right? So that they can retrace them back up and break them. Usually what most retail traders think about when you get a trade is they think, oh, it's just going to break and roll straight down, but that's not the case. Usually it's roll up, break down, retrace, and then the big break comes to the downside. And that's true intraday usually, and definitely true over higher time frames, right? So now, this is what we're looking at right now. So before everyone gets bearish, because if you read Twitter or everything else, people are talking about how valuations are extended, you know, that this is a bubble, et cetera, et cetera, et cetera. Remember, you need things to really break before, and then watch for the retrace before the real rollover starts. And it usually takes a little bit of time to develop that. Okay, so that's bigger picture. We can clearly see this is what has to go, that 17,236 and this 17,546 in order to get any kind of significant downside move started. Okay, so then that's one way to look at it. Next. My bigger concern, obviously, is what we do intraday and how we make money. So I put up a chart, and I want to go through this because it's important from Friday. See this open drive lower here? Okay, so let's see, 20th, 19th. Oh, I know what the problem is. I need to load more days. 1 second. Just remind me if I don't put them back in to change the days here. 6 days. So if you go back to Friday, right, I'm going to erase the lines on this chart. And I guess these stay here. So here I'm going to. Really? Okay. Moving a little bit slow, but I'm sure it's because I'm using up the resources. Okay. See this right over here? By the time you get right over here, you go, oh, this is open drive lower. The problem is that identifying it right about here is very difficult, and things start to get washed down. So this applies to both pre-8:30, 9 o'clock, and post 9 o'clock, okay? When you look at this roll to the downside, I found a very easy way to tell when the majority of the open drive lower or open drive higher is over. And the way to do that is look for the tweezers bottom to form. Doesn't matter whether it's 100% meaning an algo on the right, just you need a tweezers bottom. If you'll look at this chart, this is where the tweezer bottom formed. Okay, so this accomplishes two things. Yes, you can get a reversal without getting the tweezers bottom, and if you wait for that, that means you missed the reversal. That should be okay with you because what causes the greatest amount of damage is the amount of losses we take looking for that reversal, right? If you wait for this tweezers bottom, from this open over here at 8:30, you miss 17,930 all the way down to 17,730, 200 points of roll down where you don't take any stops. That's really, really important in the process of keeping your money. Okay. If you go look at that same area, then you go, well, what happens when I get that tweezer's bottom? When you get the tweezer's bottom, if you get the proper, with the algo on the right-hand side, or you just take the tweezer's bottom itself, what that shows is that there's people that are already searching for and ready to negotiate that low, even if they fail initially. So then if you take this, I'm going to change the dates on this. I'll roll them back. Please remind me if I forget. Okay. So if you look at that same roll down, I hope the pictures are being copied over. There we go. That's Friday morning. That's your tweezer's bottom. I want to show you something. If you then look, this is the trade we took Friday morning, right? Right over here. You could have waited for your tweezer's bottom to form really on the 50 cent, but it forms over here, right? Then you're looking for blue dot star, which would have stopped you initially, and then the trap back in. But what you know is because they're negotiating that tweezer's bottom, and later today I'll go back in and if you go do research, you'll see, because we have that tweezer's bottom, we know that the majority of the downside has occurred. Now I will tell you, you can get some pretty fat reversals without getting a tweezer's bottom, right? And there's other tools you can use to get it, but it really saves you from the multiple stops in a row. And really, for the way that we trade and the leverage that we use, as 5 minutes earlier, this right here, because I don't use this chart to determine the tweezer bottom. I use the 50 cent chart to determine the tweezer's bottom. Ron, I don't take them off the 24. I take them off the 50 cent. And this is the first one. Let's see, just make sure I got my math right. I don't think there was a tweezer's bottom prior. There was not. And the 50 cent chart, this chart, requires more input to get the bars to form, and so they tend to be more stable. But even with that point, which is well taken, you still could have done this. It still would have saved you, because that ends up being, I want to say, the first tweezer's bottom. It does. So even if you had started working here for a tweezer's bottom, you still don't have an algo on the right-hand side. And then what you end up with is on process. Blue dot down, take the first bar back up for the reversal, and you would have been long right there if you did use this chart for the tweezer's bottom. So technically, either way, the 50 cent chart is stronger on producing a more reliable read, but you can use the 24 tick chart and do just fine. And what you'll notice is, see when we start ripping to the upside up here? So this is one of the places where you don't get a tweezer's top along the way. Well, you get your, excuse me, I stand corrected. You get your tweezer's top on this one right here. I really didn't look at this chart to determine that. And now if you'll see, right, you would have gotten an orthodox close and a trap back in. I wouldn't have taken this because it's not enough for me. It's not enough evidence for me to take, but you'll still see that by the time they form that tweezer's top, it's telling you that there's contra parties willing to participate in the market and push the market the other direction, versus, let's say, which has happened to many of us, not you, Ron, but a lot of us in the room, right? We'll look at this and go, oh, I missed my long. And then you'll start looking up here and you'll go, oh, well, I want to short. It must come back, right? It's got to do a 50-60 retrace. And people just start shorting up here without a basis. So if you look for me on this rip up over here, so here's where you end up on this whole rip up. Here's where you end up with what I consider a proper tweezer's top, left, right, and there's push down in between. And now you'll see you get orange dot up followed by orange dot down, which gave you the reversal there at 1053. The most important part is this is worth waiting for. Okay, it will reduce the number of stops. And if you look at the bigger picture, right, almost everyone in this room has had big days. Almost everyone in this room has had big days. But what you want to avoid is giving back the capital, especially the more leverage you use, the less faulty decision, the less, even if your decisions are on process, you want the fewer negative outcomes. So the question becomes, well, how do I reduce those outcomes? Well, the answer is get get the formation of that tweezer's top, and then go to work on your algos, and your win rate will go up significantly. Where do you miss out? You miss out right here at 1211, where it just rolls down and it doesn't form a local tweezer's bottom. You could have reached over from this, but the further you reach to the left, the harder the trade is to make work consistently. It's better if it's local, where it's all gathered together like in one little area, right? So my suggestion is you look for local tweezers tops and tweezers bottoms, and then even if that tweezers top or tweezers bottom is broken, the algo patterns from there tend to work. It'll reduce the number of stops you take, and therefore increase the amount of profit you take out of the market day by day. Still hearing from some people, and the hearing is the same across the board. I'm going to reload these 3 days so I don't forget. Give me just 1 second. And then reload, recalculate. Oh, and then one last piece. Get behind the 5-minute apexes on the or the 15-minute apexes. Like this morning, if I was looking at this chart, right, what would very much be on my mind is getting behind on a 15-minute, getting my setups behind here. Will I? I have no idea. And over here, this is obviously, here I'll change this to, this is we're obviously behind them already to open up from the RTH. If I move to a 24-hour, there's the 24-hour, and I still want to get behind, well, now this swing, I want to get behind these apexes again. So now it would be this 17,649 right down here we just opened up. You can see we swung behind these apexes here where I would expect a responsive buy. And then the last thing is burn the 30 minutes if you can. It just doesn't make any difference. It just doesn't make any difference to your trading if you'll wait. The big thing this week is NVIDIA's numbers. I'm sure they'll be great. I mean, that company's just on fire. Doesn't mean that the market will go up afterwards or down afterwards either, right? I had one other piece I wanted to add. Let's see. Oh, I posted the pictures. I know I don't have my camera on, but hear that? I have pictures of what I want my setups to look like after open drive higher and open drive lower, from entry to exit all the way through, so I don't get lost in the idea of emotion or trading, or it should or should not do something. I don't want to get lost in that emotion, right? I've gone through my checklist. If we go trend day up, I generally like to be a long trader from dips down. If we go trend day up, I'm just going to be patient and wait for a setup. It might not come at all, right? But I very much, because of the leverage I use, want my best setups. I don't want to negotiate with the market in terms of maybe it'll pay me, maybe it won't. I want to be in a position of I'm going to take money out of the market, or I'm not going to do anything at all. Ultimately, at the end of the day, that's where I want my position to be. I want the market to have very low odds of taking money from me, and I want very high odds of taking money from it. Okay, that's how I'm going to run my trading, right? And with every right, that is the correct way to do it, right? That is the correct. We're testing Friday's high. I don't pit Mondays high and low. The indexes were closed. The indices were closed, and so it was just low volume futures trading. So I put $0 worth of incentive on there. Also realize if it goes trend day up, oh, I know what I was going to say. I see people missing trades and taking mediocre B grade trades to try to make up for it. It sucks to blow up these Apex accounts. It sucks to draw down on your own cash accounts, right? My suggestion is you just wait, right? Just wait. Look for the algos that we keep pushing over and over and over again. They keep paying over and over again. If you missed the trade, you exited early, whatever, don't worry about it. It'll come back around, right? And if you don't harden yourself to believe that, you will find yourself chasing a lot of trades that are unnecessary. Same in my position, right? You'll find yourself chasing a lot of trades and that I would deem unnecessary to put yourself in that position, right? Because all that matters, look, Nico, who's not in the room usually, I don't think he's in the room this morning, right? Nico's 20 years old and in college at Arizona State, right? That kid just pulled out $8,000 for the last 2 weeks worth of work. $8,000 for 2 weeks worth of work at sub 2 hours a day, right? What did he do? Blue Dot Star. That's what he traded and traps on Blue Dot Star, right? That's worth $8,000 every 2 weeks. Now, if you're looking at your P&L and you're not pulling out, so that's across 4 Apex accounts, but if you're not pulling out $2,000 per account in that 2 week period, you're underperforming Nico. What's Nico doing? Nothing magical. He's following the process, right? He's not doing anything exceptional except following the process. He keeps his size small, right? And he just lets it add up. He gets his money and off he goes to class, right? That kid could be worth $1 million before he graduates if he plays his cards right, right? So, anyways, that's my 2 cents. If I think of anything else, I'll let you know. I'm looking for the process to kick in. Blue Dot Star down on the way down, then looking for their first algo back up. That's one of the things, preferably outside the channel. Blue Dot Star that gets trapped. Blue Dot up. I will not take Blue Dot up on its own unless it was preceded by a Blue Dot down, or Blue Dot up that is not preceded by a Blue Dot down, but then gets stopped and trapped. I will take that. Okay, and obviously I'll point them out as I'm taking them. And then what am I looking for primarily? If the market starts ripping one way or the other, tweezers, tops, and bottoms, because they've been paying great, and not just for days, but months now. They've been paying great, particularly when there's an algo on the right side of the tweezers, right? So let's just see where it goes. And then remember, you're an opportunist, right? You're not a market prognosticator. We don't get paid to go on CNBC and say, well, 6 months from now, due to, National Geographic's, population movement, the market should be at, 19,200. We don't get paid for that. We get paid for, there's the seller's trapped, I'm going long, right? So, and the easiest way to do that, if you can't remember all the stuff I just talked about, look for the tweezers top, tweezers bottom, or look for Blue Dot down, followed by Blue Dot up, or those variations on the traps. And that's what I'm doing. And I have pictures of that right here on my desktop, hard copy, so I can go and see, oh, this is how I made money. Oh, this is why I lose money if I don't pay attention, etc., etc., etc. I did not look at their Zcon at 9 o'clock, but I will right now. Today's the 20th. No econ. We have, well, it's U.S. leading index of change. I don't think anyone cares about that. No Fed speakers, 3-month bill auction, argues for balance. So, and that's certainly what I will be trading. Make sure this is all set up to trade. This is not by the way, a tweezer's bottom. That is potentially an apex trap over here to the left, but is not in my book a tweezer's bottom. It's certainly not one that I'd want to go off of now. This is all right. It's B grade because there's no 2 bars up then bar back. Okay, but potential there, and then supports right below there at 17,640. Right, so you can see people who chased up this morning are already having a challenging time, right, figuring out what the hell they're doing. And I don't know if the market's up or down. I think it's down. Down 100 points. Down 200. So see that blue dot down? Now I'm looking for the next bar up in that sequence, right? Which in this case, if it closed, so if you want to anticipate that, that would be 16, 5, 7 and a quarter, right? See how we came right to that 40? So that's what that would be, but you need the bar up now to complete that with the blue dot down. I'd say that's an A grade, not A plus, not, it's just A grade. And it would be any of these closes as it moves around. So right now it would be 51.50, and that acknowledges that you're willing to trade aggressively in the first 30 minutes. And there is obviously no tweezers bottom there. And if y'all excuse me a second, let me run over to the house for a second. I'll be right back. And I don't know where my thumb is. Oh, there it is. I'll be right back. Is the garage closed?
No, because the dogs are outside. Just leave them out there, okay? Just leave them out there.
Guys, that's a perfect example of delayed open drive lower and no tweezer bottom as of yet. You got the blue dot down, but it didn't give any extension underneath, right? I would have rather had it here to the left. So I'll just wait till they work it out. And there's a tweezer's top actually right over here, this, and you would play that against that 93 roughly, 86 against 93. Pretty liquid in NQ, the way it's jumping around. They could put a tweezer's bottom and if you get the 67 to print, yeah, I'll go up. That could be your tweezer's bottom there for balance, hypothetically. There's your tweezer's bottom. Now you would look for 74 1/4 to provide you with the bar up. Now you can't get it. No tweezer's bottom. Apex trap at the best. No blue dot on the right down, just to wait for me. Next target is 42 and 24 from a support standpoint. And again, we're still in the first half hour, so like my need to rush is low, and we're in the 9 minutes, 10-minute window where there's a lot of stops. So I'm just going to stay relaxed. That's, by the way, is a tweezer's top with a trap back in over here on the right, left, right, stop out, trap, fall. Yeah, and since I don't have a blue dot down, I don't have any possibility of a tweezer's bottom. I'm just on relax mode. Star up. If that star gets trapped into, that would be okay. But again, waiting for that tweezer's bottom keeps you in those vicious markets where it goes stop, trap, stop, trap, stop, trap, and you get caught in 2 or 3 quick stops. For the most part, that eliminates that price action. So that's a place where you've encountered a lot of stops, and I wouldn't even be looking at the 25 cent right now at all. It's not a matter of whether it bounces or not. It's a matter of avoiding the stops. Potential blue dot up if that prints, if that gets stopped out and trapped, that would be interesting. You can see there from a 5-minute perspective, outside of that opening push, that's 1, 2, almost 3 5-minute bars down, which will put you in a trend day down type of scenario. You now would want to see a close above your last down bar with a nut bar, clean close above. That doesn't mean, by the way, don't take any trades. It just means be aware of what the playing field looks like potentially, right? Down 185 on NQ.